How to pick undervalued stocks. By understanding various market trends, investors can make more informed decisions. We'll dive deep into analyzing company fundamentals, evaluating key ratios, and considering various factors that may affect stock prices. Armed with this knowledge, you will be better equipped to pick undervalued stocks and potentially enjoy higher returns on your investments. Welcome to Braylen AV. If you haven't yet, please like and subscribe. Number 1. Look for companies with low price-to-earnings ratios. This financial metric provides insights into how much an investor is willing to pay for each dollar of earnings generated by a company. By focusing on low P/E ratios, investors can uncover potential bargains in the market that may have been overlooked by others. This approach not only helps to diversify one's portfolio, but also has the potential to generate higher returns over time. Number 2. Check for companies with strong financials. Analyzing key financial metrics such as revenue growth, profit margins, and return on equity is essential in making informed investment decisions. Additionally, comparing these data points against industry peers can provide valuable insights on the relative strengths and weaknesses of a company. By carefully evaluating these factors, investors can unearth hidden gems and reap significant gains by taking advantage of the market's inefficiencies. Number 3. Consider companies and industries that show potential for growth. One common strategy is to evaluate businesses within expanding sectors, as they are more likely to outperform their competitors. Analyzing companies with strong financials and underappreciated potential can lead to profitable investment opportunities. By focusing on these criteria, investors can increase their chances of successfully identifying undervalued stocks with significant upside potential. Number 4. Look for companies with increasing revenues and earnings over time. This approach allows investors to identify potential winners that may have been overlooked by the market, offering substantial future gains. Examining a company's financials and performance metrics over time can help determine its overall health and trajectory. By focusing on these key indicators, an investor can make well-informed decisions, potentially leading to long-term success in their investment portfolio. Number 5. Evaluate a company's management team and their track record. One crucial aspect to consider when determining the potential of a company is the strength of its management team and their ability to produce consistent results. By evaluating a company's leadership and their track record, investors can gain insight into the company's future performance and make educated decisions accordingly. In this way, a strong and experienced management team can play a pivotal role in driving company growth and ensuring that your investment is well positioned for success. Number 6. Check for insider buying or selling activity. This provides vital clues about the true value of a stock, as these insiders have a deep understanding of the company's prospects and performance. By analyzing this information, investors can gain valuable insights that may lead them on the path of identifying potential investment opportunities with significant growth potential. Additionally, monitoring these transactions can help investors make well-informed decisions by factoring in the confidence and sentiment of key company insiders. Number 7. Research the company's competition and overall market trends. This meticulous examination allows investors to compare the company's financial performance, future prospects, and market position to that of its competitors. Understanding these factors equips investors with the information needed to determine whether a stock is undervalued or overpriced, paving the way for informed decision-making. A comprehensive analysis of market trends helps to identify opportunities within the industry, ensuring that investors are capitalizing on the most promising avenues for growth. Interested in starting a business to create wealth? Click the links in our description box below. Number 8. Look for companies with a history of paying dividends. Dividends serve as an indicator of the company's financial stability, shareholder-friendly policies, and a commitment to long-term growth. Alongside traditional valuation metrics, analyzing dividend track records can provide valuable insights into the investment potential of a stock. Additionally, dividends may offer a steady stream of income, further enhancing the attractiveness of these undervalued stocks in a well-diversified portfolio. Number 9. Analyze the company's balance sheet and cash flow statements. By examining balance sheets and cash flow statements, investors can make informed decisions about undervalued stocks. A deep understanding of these financial documents can reveal insights on a company's assets, liabilities, and overall monetary performance. Through a detailed assessment of a company's financial position, investors can identify undervalued stocks as attractive investment opportunities with a high probability of substantial returns. Number 10. Look for companies with a strong brand. Such companies often have a loyal customer base, which can result in consistent revenue streams and long-term stability. By selecting stocks that are undervalued but have strong brand recognition, investors may discover opportunities that others have overlooked. This approach not only minimizes risks, but also has the potential to create wealth, as these undervalued stocks regain their rightful market valuation. Number 11. Check for any industry or sector trends. By keeping a keen eye on market dynamics, investors can spot promising opportunities that may have been overlooked by others. Analyzing financial ratios and comparing them with industry benchmarks can further aid in the selection of undervalued stocks. Ultimately, this approach provides a strategic edge in the competitive investment landscape, enabling the identification of stocks with strong growth potential before they catch the attention of the broader market. Number 12. Investigate any recent news or events that may affect the stock's value. By closely monitoring market trends, financial statements, and current events, investors can identify potential undervalued stocks. This approach not only allows for informed decision-making, but also provides a competitive edge. Number 13. Consult with an investing professional. These experts possess a deep understanding of the market and utilize their knowledge to identify stocks that have significant growth potential, but have not yet been widely recognized by other investors. By doing so, they can help you capitalize on these hidden gems and maximize your returns while mitigating risks. Number 14. Now, it's time to pick your stocks. We hope this helped you understand how to pick undervalued stocks. By employing the strategies and techniques outlined, investors can make informed decisions when searching for potential opportunities. Evaluating financial statements, conducting thorough industry analysis, and keeping an eye out for market trends are all must-have components when seeking undervalued stocks. Ultimately, staying well-informed and diligent in research allows investors to capitalize on opportunities and generate strong returns in the long run.